I was talking to a couple of people the other day in the trading room, and they were asking me how did I think that the DAX was potentially at a position where the market might actually turn, where the DAX might actually fall and fall for a good 600 or even more points. Well, I'll show you how I did that calculation. Basically what I did was I'm looking for a swing that I can use as a reference point. Now I'm looking for a fairly big swing against the trend, and as you can see, this is the first swing that really satisfies that those criteria. And what you do is you take your fib tool and you put it on the high, put it on the low, and you project up. Now what's the level? Well, the level I'm interested in is 127%, 145%, and the last level is 162%, and you can see that I've marked those levels on my chart. So let me take this fib tool off, and we can see that that's exactly where the market is at this moment in time. So what I'm going to do is I'm going to go down to the hour chart, and we're going to put some volume on this so we can actually see what's going on. Well, it gets quite interesting. Let's just expand this and enlarge it a bit. Okay, and what we do is we bring up this indicator on the bottom. This platform, by the way, is a free platform. You can get demo copies of it. It's called MetaTrader, and it really is quite a good platform for doing this sort of work. So that red line is where the DAX actually hit on the 10th, and you can see that we hit there smack on the 10th at 10 o'clock. We went through it by a couple of pips, and then we proceeded to fall for about 120 points. And again today the market came back up to that level, and it hit it, went slightly through it, but it didn't close above it. So this is what a lot of people would call maybe a double top, and it's more significant because it's actually at this 127% expansion ratio. So this is what makes it quite exciting, because potentially this could be the point that the DAX actually falls from. So what's been going on? What have the market makers been doing? Well, the market makers are a tricky bunch, and what they've been doing is they've been busy stopping people out. Now, you've probably been trading for a while, and you've found that most of the times the market makers will take your stop. And you think, why? How did they know my stop was there? Well, the market makers read exactly the same books that you've read, and they can't just get filled at anywhere in the market, because if you've got a couple of million contracts that you want to buy or you want to sell, as in this case, then the market makers can't get into the market unless there's enough liquidity for them. So just think, this market has hit this point. Everyone and his dog has seen 127%, if you know what you're looking for, and they would have sold this market, and they would have put their stop, guess where? Just above that high. Great! They would be rubbing their hands with glee, probably celebrating, imagining the champagne they were going to be drinking, and then look what happened. The market did decline. Well, when they went 120, 130 points up, they would have been thinking, that's it, the top's in. And what happens? The market comes back up, and it all takes their stop, and then I don't know what's going to happen. Will it decline? I hope so. If it doesn't, well, I won't lose very much, because this second attack on the top with this sort of candle formation is indicative of a stop hunt. That is absolutely classic. Let's put this on a candle and you can see exactly what I mean. It looks like an indecision bar. The market came up, whack through the top, no follow through. No follow through as of yet. And what's also telling is, if we look at volume, you can see what's going on in the market maker's head, and where was the liquidity. You can see at this point here there must have been an awful lot of contracts traded, because we've got high volume. So if you wanted to sell into this market without pushing price down against you, where would you sell? Well, you'd sell into the high volume. High volume up bar is where a market maker will sell, and a high volume down bar is where a market maker will buy. And as you can see at this point here, we had another high volume down bar, and this time the market makers were buying because obviously they had not accumulated enough contracts, and this is why they pushed this market up to this point here, formed this lovely little reversal candle, because they were taking everyone's sell order that was sitting up there. So basically, as this market came up, took this secondary top, took this primary top here, made a secondary top here, what happened? Well, the market makers were buying the sell positions, because the people who were selling here, who had their stops just above there, when the market makers pushed the market up to this point, they would have been taking those sell orders. So the market makers are accumulating sell orders at this point. And if we do start to get a decline, then potentially this is a top that's going to last a long time, perhaps anything up to a year and a half. Well, if you want to do some of this analysis with me, you are welcome to join my trading room. You can see it at forexplanet.co.uk, and this is the sort of analysis I do all the time on many time frames. You don't need to just apply this to the daily chart or the hourly chart, but if you want a nice life, if you want to trade and benefit from the time that you can have off, well, the market does the work for you, then this is the sort of trading you should be doing. And it's the sort of setups I look for every day of the week, because the market can be traded to suit you. Now this trade, if it runs, will be something that you will stay in for a long time, and all you will do is continually sell as the market comes back up to you. And with these sort of techniques that I will show you in my trading room, you'll learn how to do this yourself. Well, if you have time, stop by. It's forexplanet.co.uk and have a look at what we're doing in our trading room.